When trading Forex, it can be quite simple. When trading currencies, it can be quite simple. If we buy into a market, we are anticipating that one currency pair is going to gain strength, whereas the other currency pair is going to lose its strength. For example, if we take Euro USD and we buy into the Euro USD market, we're anticipating that the Euro is going to gain strength and the US dollar is going to lose some of its value. Now with gold, it's not quite as straightforward as this. If we take XAUUSD for example, which is gold traded against the US dollar, if the US dollar is very bullish, this does not necessarily mean we should be selling gold and gold is losing its strength. And in this video, I'm going to be peeling back all of the layers to explain to each and every single one of you how to trade, and I'm going to be revealing the best strategy to use while trading gold so you can trade gold successfully. So without further ado, let's jump into the video. Now when looking at XAUUSD, a lot of the time people believe that if the US dollar is going to be gaining strength, it just fundamentally means that gold is going to be losing its value. However, that is actually not strictly true. Gold is a commodity, and not only is it a commodity, it is in limited supply. So when we're looking at gold, we're not looking at it like we're looking at a currency, we're looking at it as something that has value and is in limited supply. And the perfect way to look at gold is also looking at gas and oil prices. Each and every year, gas and oil prices increase in price. Now, why is this? It's because there is a limited supply of gas and oil. When we're looking at gold, there is a limited supply of gold, which is why this commodity is always a good long-term bullish investment. Because there's of limited supply, every year it's going to get slightly more expensive because we're not just going to mine unlimited. Once the gold pot's gone, it's gone. Just like when we've used up all the oil reserves, it's gone, which is why it gains value. It's a valuable product anyway, but because it's in a limited supply, it's even more valuable. And the perfect way to explain and sort of convey my point is if we go into the monthly time frame here on gold, you can see since what I would say about 1999, we've just gained in value. We're going to go on to the daily time frame for this because the fundamental reasoning behind this strategy is through support and resistance. So what we're going to do is we're going to drop some strong support and resistance zones that we think will be effective, and I can see one that pops out immediately. So if we just grab our rectangle, and we are going to be looking to trade off of this zone here, like so. Once again, this is a beautiful zone. So as you can see, acted as support in here, we broke through, retested as resistance, and we continued lower. This time we broke through, retested, and continued higher. So the strategy is essentially a break and retest, but it's not quite as straightforward as just a break and retest. So what we're going to be looking to do is we're just going to be going on to the smaller time frame. We're going to be looking at a more zoomed in version. And this is why a lot of people that put sell limits on gold aren't profitable. Because you're thinking, if we're going on to the daily time frame, okay, you're thinking this is a brilliant zone to trade off, and you'd be right, it is a really good zone to trade off. So what I'm going to do is I'm going to put a sell limit right in here, a short position right there, like so. I'll have my stop loss just above the zone, like so, and then I'll take profit down here back at all these lows over here. Okay, this would be a pretty good trade. Okay, so we've got one resistance and support zone there, one support zone there. We're looking to sell limit in here and then target down here, which would have been a good trade, and we'd have got a nearly 1-to-6 risk to reward ratio, which again is a brilliant risk to reward ratio. However, we snapped through that. And even if we go on to the 4-hour time frame, we just broke through this zone, this major support and resistance zones, like it was nothing. So how do we trade gold effectively so we don't get silly mistakes like this? And the answer is very simple. All we do is just wait for some confirmation. What do we do? In here, okay, we got the break, and now we didn't get any rejection here, which is the most important thing. So in this zone here, most importantly, we didn't see any rejection, okay? So what we're now looking for is we're looking for a break and a retest, and then we're looking for this zone to turn from resistance into a support zone, okay? And when we see the rejection, we then get into the market. So if we say take this candlestick here, tapped into this zone beautifully, in straight away. This would have been a very good trade to take. So what could we have done? We could have gone for a long position in here, like so. Profit, stop loss down the bottom. We could have even just put our take profit up here, and it's pretty much a 1 to 2 risk to reward ratio, and that's probably the minimum you want to go for is sort of a 1 to 1, 1 to 2, and we're at 188, so we're pretty much at a 1 to 2. We wouldn't have hit take profit as of yet, however, we would have nearly been there. Now, if we've gone into replay mode, okay, we can see here that we've got a beautiful support and resistance zone. Okay, so we've got support in here. Once again, we've tapped in here, we've tapped in here, we've tapped in here. Now, the key thing about this strategy, okay, is that we don't want to prematurely get in, and we don't want to be dropping onto lower time frames to get into our trades, because if we're looking on lower time frames, we're drawing on zones on those lower time frames, and those lower time frame zones aren't nearly as strong. You saw what happened to this zone, and this was a very strong zone. Okay, so we don't want to be trading off of weaker zones on like the 1 hour or the 15-minute or even any lower time frames. Okay, so what we're going to be doing is we're going to be looking for some rejection on this bottom, and then we're going to be looking to take the trade. So for example, we've got these trades in here. We've got a nice support and resistance zone. We're now looking for price to come back in to this zone, okay? How did I play it again? So now we've started to play. We're going to be waiting for the moment. Now, what a lot of people might have done is they might have decided to get in on this candle here. See that little pin bar right there, just above the zone? You could maybe say that's a lower high. You do not want to do that. Now, obviously, this is all hindsight because it's in replay mode, and obviously I know what's going to happen. However, this is not tapped into our zone, and you don't want to be getting FOMO and just jumping into this trade all blind. So we're going to be patient, and we're going to wait. So what we're going to see, we're going to see the price now starts to come back down again, and we're waiting for it to come back once again into this zone here. Prices once again start to push up, but now we're going down. Now what are we waiting for? We're waiting for confirmation, okay? What are we waiting for? This is what we're waiting for. Confirmation in our zone, okay? So if we're looking, if we're zooming right in, first of all, the candlesticks are really small, which could indicate exhaustion, which could also indicate a move to the upside. But if we're looking here, what does that look like to you? That looks like a tweezer top, tweezer bottom. We've got pretty much equal lows right here. So we've got a double bottom there. We've got a bullish candle pretty much engulfing the bearish candle, which does indicate to me at least that this market wants to go higher. So what are we going to do now? Well, it's pretty simple. What we're going to do is we're going to get out our long position tool. We're going to get in on this candle like so. We're going to put our stop losses just like that. I think that's a pretty good stop loss. If you want to be a bit more conservative, you could just bring it a little bit down more, maybe to about there. I would say that's a pretty good zone. And now this is all we're going to be doing. Trading zone to zone. That's it, right? So now we're going to target these top zones up here. This gives us almost a 1 to 4 risk to reward ratio. So what are we going to do? We're going to be patient. We're going to wait. We've got a 1 to 4. We've got a very good place for our stop loss. Our take profit is also in a very good place. Let's just see what happens. We get in on the market. It starts to move around. We go into a little bit of profits. We get a nice candle here. Now, I'm just going to pause it right here. If we're looking at this candle here, what does this indicate to you guys? Put it down in the comment section right now, and I'll give you a second. What does this candle here indicate to you? And I'll be telling you guys if you're right. So this indication right here, this candle looks to me like a very, very bullish candle. If you're looking at this, right, there is very little wick and a lot of body. This candle closed very, very bullish, which indicates to me that this market wants to go up. So now what we're going to do is we're going to play the market after the confirmation for this very bullish candle. Once again, very little to no wicks, lots of body, very bullish candle. We're going to be playing it now to see what happens. What happens, we do get a little bit of a retracement. Some people might close there. We're just trading zone to zone because that's how we want to trade. We're still waiting. We start to come back down a bit, but we're not getting FOMO. Huge push to the upside. And then once again, we're just waiting. We're almost at our take profit. Maybe you could close out now if you wanted. Once again, even closer to our take profit. We're just waiting. Potentially, and I do want to say this right here. So obviously we smashed our take profit, okay? We smashed our take profit. We had the confirmation. We had the test in. We waited for the rejection. We got the rejection, and then it hit our take profit. Now, obviously, on this candle here, it came really close to our take profit. Some people might have decided to close out. Potentially, obviously, we're looking at this in hindsight. So maybe I would have also closed out about here. We're almost at take profit anyway. Even if we closed out right here, we'd have still got a 1 to 3.3 risk to reward. So we'd have still got a very good risk to reward. However, if we was to be waiting and be patient, what would we have got? We'd have got a take profit smashed, and we'd have got this candle just shoot all the way to the moon and break this zone completely.